Did you guys know that over the last 30 years, mutual funds have been costing investors around hundreds to even thousands of dollars in fees? That's crazy, but it's a good thing that we have ETFs. Hi YouTube, welcome back to Investing with Saran. My name is Saran and I'm a go-to channel for dividend investing, growth stocks, trending stocks, and much more. Since last week, we've been introduced to ETFs and their benefits compared to mutual funds. If you didn't watch it, make sure to click that pop-up that comes on the top. You've learned that ETFs are used for more passive investing. They are preferred by investors who are either beginners and want to diversify, investors who are part of the FIRE movement, investors who prefer less volatile assets, or even just leave it and don't worry about it investors.
Don't worry about it. Don't worry about it, sweetheart.
As promised from last week, this video is going to be about the best Canadian ETFs for 2021. Now, let's get started. The S&P 500 is the closest thing to a default US stock index. Its largest components by weight are mega cap stocks such as Apple, Microsoft, Amazon, Class A shares of Facebook, and Class A shares of Alphabet, which is also known as Google. The S&P 500 ETF is an inexpensive way for investors to gain diversified exposure to US stock market, which often is determined as the market because it's one of the first benchmarks for indexes in the stock market. Additionally, the S&P 500 index has religiously given 10% overall return yearly for investors, which is really high for an ETF. Now that you've learned about the S&P 500 index, we can look at the various types of ETFs that the Canadian investors can choose to invest in. My personal favorite is VFV.TO. This Canadian ETF mirrors the American ETF VOO, which is known for their low MER fees. At the time of recording, VFV.TO is priced at $92.34. and this has 1.23% annual dividend yield. Its one-year return has been great with a 24% return, and its three-year return has been even better with a 40% return. As stated before, this ETF mirrors the VOO ETF, which holds stocks such as Apple, Google, and more big names. Overall, this is a great asset to have in your portfolio, and personally, I'm trying to build this position to make up at least 50% of my overall investing portfolio. Now, let's look at the next ETF. VEQT is a 100% equity allocation ETF from Vanguard Canada and one of its 6 all-in-one diversified portfolios. This portfolio's objective is to provide investors with long-term capital growth by investing primarily in equity securities. This Canadian ETF has more than 12,800 individual stocks within its ETF. VEQT offers investors a quick way to build a portfolio that is diversified worldwide and across different sectors with a single purchase of its ETF. The Vanguard VEQT does not hold individual stocks directly, as it is an ETF that holds other ETFs. To be more specific, it is invested in other Vanguard ETFs that have exposure to different individual companies. VEQT is made up of the Vanguard's US Total Stock Market Index ETF at 41%, the Vanguard FTSE Canada All Cap Index ETF at 30%, the Vanguard FTSE Developed All Cap North American Index ETF at 21%, and the Vanguard FTSE Emerging Markets All Cap Index ETF at 8%. The primary sector is focused on financials, technology, and consumer discretionary, which makes up more than half of its value. Furthermore, it allocates to 50 markets across all the world, which gives exposure to various countries. The management fee for VEQT is currently 0.22%. By adding the operating costs of this fund, you get a management expense ratio, or also known as MER, of 0.25%. Currently, this ETF is priced at $34.37, which is relatively cheap and allows beginners to buy shares at a low price. With an annual dividend of 1.33%, investors get a small return in addition to their market appreciation. Now, let's look at the final ETF of this video. VDY has attracted over $600 million in assets since 2012. Vanguard is committed to having some of its lowest management expense ratios in the industry, and VDY is no exception to this rule with its MER of 0.22%. VDY tracks the FTSE Canadian High Dividend Yield Index and seeks to invest in great dividend-paying companies across all industries. Doing that has allowed VDY to build an attractive portfolio yielding 5.42% monthly. VDY is a little less diversified with only 45 holdings, with its top sectors being in financial, which holds about 58%. 24% in energy, and as well as 9.5% in telecommunication. For those who are not worried about being overweight financially, VDY can be a great low-cost investment that allows an investor to accumulate dividends much faster than your typical broad market Canadian equity ETF. Overall, this stock has a cheap price point at $40.25 at the time of recording, and this price enables investors to easily buy in and receive dividends monthly. I currently have 13% of my portfolio in this ETF, and it already has given me a return of 30%, and that's only the market appreciation. The dividends has given me a lot as well. As mentioned before, I personally love ETFs, as they are our easiest way to invest and also one of the safest. The ETFs that I've stated above are more focused on all equity, and this attracts investors who are more risky or invested in more growth stocks. For those who are older or like more income ETFs rather than growth, there are other ETFs to choose from. If you want me to make a video about that, I can make one in the coming future. But for those who do want to invest in the ETFs that I've listed, I'll let you know how to do so. I personally use Wealthsimple Trade as there's no commission fee to worry about with the platform. If you also want to buy ETFs with Wealthsimple Trade, I dropped a link down below in the description, which allows you to receive a 10% return for your first $100 that you invested with the platform. I honestly think that's a great return, as the S&P 500, also the VFV.TO returns the same amount, but within a year rather than instantly. But now, if you're enjoying this video, make sure you punch that subscribe button down below and drop a like. This will help boost my video with the YouTube algorithm and help any investors along the way with their investing journey. It's been Investing with Saran, and join me next week where I'll talk about my small account growth challenge for 2021. The comment of today's video is from Abby with her comment, "What ETFs should I buy?" If you want to be featured in the next video, comment on this video for a chance. Remember to subscribe down below and check the end of this video. Bye for now. If you want to learn more about investing, click the videos down below.